Good morning, everybody. It's Christian from Student Education with the 4 Major Notes update for the 5th of September 2012. Hi guys, it's going to be 4 major starting with Euro against US dollar. Let's have a look and see what's been happening on the daily. Okay, a lot of hesitation at the top end over here. You can see a lot of consolidation over the past week or so, and price not really moving any higher. Sideways motion upside, but this sideways motion coming at a major support and resistance level. Notice here at 12,700 we have a very strong price support and resistance level on this pair, and if I keep zooming back you can see the major one being here in January of this year, through a bit of consolidation through mid-May, and then further consolidation at the underside through June in particular, a lot of sell-off. So coming into this area here, a lot of buying sentiment just recently on the Euro against US dollar, moving higher, however being capped, potentially capped by this 12,6,500 mark here, going into this major support and resistance level. So if we need to see any further extensions to the upside, we would need to see a break and close higher than this area here. We would have to do a hell of a lot of positive sentiment in order to do so, and once we're above there, then we have the institution moving average to actually worry about. So at the moment now, a lot of indecision candles at this resistance level, more likely to see further pullbacks, which we've seen over the past 24 hours or so. A lot of hesitation here, a lot of candles, exhaustion candles. So we had 2 exhaustion candles followed by bearish engulfing here yesterday 2 p.m. and sure enough we've seen price moving lower. However, you can see down the inside intraday, you can see there's a noticeable support and resistance level here, consolidation area around the 12,480. The intermediate trend, i.e. the intraday trend line, is still higher on the 4-hour period. Okay, so a lot of support below us. We do need to see all that being broken in order to see further continuation to the downside. If that was to occur, we need to see a break below 1248 in order for us to see price moving towards that 12,3,500 mark, that major support and resistance we saw over a number of weeks. RSI is still above 50% line at the moment. So looking at my 4-hour chart, my hourly chart, entry, you can see that the RSI has broken through that. But if I was to take a trade, it would only be down towards the 1248, where I could expect some sort of consolidation to take place. So if you're looking for a short-term intraday trade, potentially one here at the underside of the institution moving average, as well as all the moving averages. Our CTC is very much telling us we should be looking for shorting opportunities. So if I was going to take a trade, then a quick one down towards that 12,480 to start with, and then look for a break below that. Otherwise, take my profit here at 1248 and then bide my time looking for either re-entry to the downside or potential bounce to the upside. Next up is sterling against the US dollar, GDP against the US dollar. Here again, like its European counterpart, a lot of resistance above price at the moment now at the 15,900 mark. We have broken above 1575 and it has rallied to the upside. However, the Fib retracement area that I took from the high in May down to the low in June, and then subsequently you can see these Fib retracement areas being targeted over the past couple of months. Notice with the 50% here, which happens to be that 1575, just above 1575. Notice how price broke above it, broke above all the moving averages recently. The CTC went blue across the board, so we had a positive buying opportunity here. And then once it moved above it, moving into that Fib retracement 61.8 before we saw a pullback back towards that 50% line. Maintaining above 50% has seen price building on that and then heading back into 5900. However, that 61.8 here at 5900 is still a major resistance level as price has failed now for the second consecutive time to actually rally higher than that. So now if we want to see any further positive sentiment to the upside, a break and close higher than 5900 would need to occur. Failure to see that would see price revert to the downside. So over here you see indecision, a lot of wicks to the upside telling us there's more selling sentiment now. We would need to see a confirmation bearish candle to confirm this sentiment over here is genuinely negative, and then we should be targeting back down towards this 15,800 here, which is our 50% line. To see further sentiment negative long term, we would need to see 1575 being broken in order to see that. But you can see the institution moving average still below price, and as it stands now, any shorting opportunities would be targeted roughly around the 15,800. We would need to see some really serious negative news in order to see price really breaking below that 15,750. If that was to occur, then we would start targeting our major price support and resistance level here around the 1565. Otherwise, back down towards 1555, a major consolidation area before we saw that 15300, which is our long-term, i.e. our monthly and weekly target support, way down here as our target overall. However, as it stands at the moment now, we are seeing consolidation and upside trend. If we do see any pullbacks, 15800 would be our likely target. If not, got to see a break over 5900 to see any positive movement upside. Next one is US dollar Swiss franc. Here you can see the price is moving to the downside consecutively over the last couple months or so, after heading into this major support and resistance high here on our weekly, which happens to be the 1000, which is also the institution moving average on our weekly chart. Bearish engulfing at the here has clearly told us that where there was resistance and prices reverted back to the downside to prior support and resistance levels. After breaking these major support and resistance levels, prices now moved lower without likelihood for the 940, 945 mark here as our price support and resistance levels, our long-term target. However, the past week or so we've seen consolidation under a fib projection level. So we took the low here in May to the high in June, back towards these lows in mid-June, and it's projected now fib projection points, and you can see the 23, the 38, the 50, and the 61, and then the 78.6 here at the 1000. Since then, it's been moving back and forwards between these fib ratios, and you can see how clearly just recently prices now come unstuck at the underside of the 23.6 mark. You can see that there's a 23.6% mark here. You can see prices finding resistance below this area here at 960. The intermediate trend is negative, so if we get a nice bearish engulfing here, or price fails to rally above that high going into the latter part of this week, we could see ultimately price being forced to the downside, getting towards that 940-500 mark, which is below, which coincides nicely with the institution moving average. Notice our CTC strategy template is telling us we should be looking for bearish sentiment, and as long as there's resistance above price, then that sentiment is generally looking long for further shorting opportunities. Moving averages 20 and 50 above price, and our institution would be our first target to the downside. Last pair of the day is US dollar Japanese yen. Here in front of me is the daily. You can see how price has been very inconsistent the past couple weeks or past month or so. Price has been trading below major support and resistance level here in the shape of the 80, but also finding support at a major support and resistance level on our larger time frames of 78. So you can see it's been consolidating between these two major points, two very strong price support and resistance levels, which I have noted here. It's important that you do note any major support and resistance levels, because they will concur as to where price is likely to move in between these areas. You see the institution moving average above price at the moment now, so it's looking for negative sentiment, and you can see that overall the sentiment just recently, you can see the high is just recently squeezing that trend line support or resistance above price. A lot of hesitation here, break above the institution moving average, however failing to actually build on that. So we had bullishness followed by indecision followed by bearishness, an evening star formation, and sure enough we've seen price revert to the downside. So where to for price at the moment now? You can see, well, it's trading this bearish engulfing here, taken below this current price support over here, and now we're seeing a pullback. So if this pullback stays below this price support and resistance level here at 78.50, then what we likely potentially just be witnessing is a breakout, the pullback, and then a continuation in the direction of the breakout. Notice we're seeing lower swings, which depicts downside sentiment, and mostly our CTC on either side has been primarily red. There's been one or two areas of blue, however that has failed to really gather strength after making those signals. As it stands now though, hard right edge, you can see that price is quite tentative on the Asian session last night, and going into the European session this morning, price is still favoring the lower end of this candle wick. So it's still negative, and that negativity under the price support and resistance level here through 78.50. So as long as it remains below 78.50, look for a bearish engulfing candle here, an exhaustion candle, negativity, and then that will tell you if you're looking or entry signals towards that 7800 long term. Notice guys, there's a lot of news coming out at the end of the week. This is the first Friday of a new month, so we're expecting non-farm payroll figures. Yet tomorrow, Thursday, we have the interest rates announcements for both the European economy as well as sterling GDP. So it's important to be aware of those announcements. There is going to be a lot of speculative trading before and after the news announcement. So if you're not trading, you're looking for trades, I'd rather be very, very tentative about looking for entries, because you're going to see a lot of whipsawing. But we do have a lot of news going into the end of this week, and it's important that you guys are aware of it. You don't want to be potentially looking for trades if there's a lot of speculative trading, because it's going to lead to a lot of volatility, which is going to be going backwards and forwards. We want to be trading true direction, and so with momentum. So it's far better just to stand aside, wait for the market to wait for the news to come out, let the market decide if it's favored or not, and then trade that momentum afterwards. So if you're looking for trades, rather stand aside until we get genuine sentiment breakouts or movement in either one direction, and then we'll trade that. So a lot of news tomorrow, in particular asset purchasing, official bank rates for sterling. We have the MPC rate statement for sterling. Then we have the European minimum bid rates. This is taking place at about 1:45 tomorrow afternoon. And then we have the unemployment figures, non-farm payroll figures, claims, unemployment claims in particular, and the ADP non-farm employment change figures for the US market. We also have crude oil inventories, quite an important one. Crude oil inventories at 4 p.m. GMT tomorrow gives you an idea of how much oil is being stored. So it'll give you an idea of how much productivity, etc., like that is likely to occur, because oil is used in a lot of production methods. You'll be surprised how much oil is used in everyday production methods. So it's important to see how those oil inventories are stacking up. Otherwise, Friday, major news announcements. So if you're not in anything on Friday, if you are anything on Friday, rather just be careful. Move your stops up nice and tight to capitalize on any, or just to stop any volatility out there. You don't want to be in a trade and then to have price moving against you quite quickly, aggressively. You're going to see that. So be aware of your news announcements, guys. Very important. Other than that, have a fantastic trading day. Keep it simple. If you are using this particular strategy template, please follow the rules of it. Back it up with sound money management, and you shall not go wrong. Okay, keep it simple, guys. Very important. Make a note of your major support and resistance levels, trend lines, etc., like that, and then look at the overall scheme of things. Look at candlesticks in particular. Gives you a lot into market sentiment. Very important, gauging market sentiment, because it can add another benefit to your trading. Other than that, keep it simple, and I'll see you first thing tomorrow morning. Until then, trade serenely.